day, everyone. Well, we see the major averages trying to push forward. As we cited, they had started weak and then finished strong for a number of days, and then they reversed that pattern 2 days ago, where they started strong and finished close to the low of their trading lows, intraday lows. And today we're getting some sort of pullback. It's not to be unexpected. I mean, the market has come up from the May 19th subset of lows into almost new high ground, and we've seen that the S&P has tried to penetrate into new highs many times since early 2015. This can be seen on a daily chart, and so the thing of it is that will this time be any different? It's possible. You've got the ECB President Draghi talking about how the other central banks should continue to join in unison in easier monetary policy to jumpstart the economy. Of course, all these central bankers are severely misguided, but nevertheless, the market interprets that as possibly good because more QE means more money that needs to find a home. And indeed, we're seeing commodities, oil, etc., continue their uptrends. We're seeing, we've seen a number of names come across in terms of actionable buy points over the last couple of weeks. I'd like to go through a couple of those names now, actually. Now, quite a few of these names are either moving higher or going sideways in a tight constructive fashion from the time we suggested them, like names like Boston Scientific and so forth. But there's a couple names I wanted to bring to everyone's attention. The first one is AYI, and that's one we talked about over the weekend. It traced back to its 20-day on constructive light volume, and then has since tried to come up off that. So that one is acting as it should. If you own this one, then I guess it's just, you should sit tight. But it did give us a very low risk opportunity off the 20-day a couple days ago. We also have MDVN Medivation, and this one was put on the list on the 25th of May. And as you can see, it's dragging. It's not keeping up with the averages. You should have been out of this one already because ultimately it was moving sideways and then penetrated its 20-day.
Dr. K. The other point about this one is that it's been somebody, Sanofi, I think, made an offer for the company around $53, and they declared that was inadequate. And other analysts have come out and said that there could be a bidding war, and I think that's what's been driving the stock higher. So it's not really, I would say, a true price move. So if something happens and the buyout falls through, then you could see this thing come down. Just wanted to throw that in.
Yeah, and that's good information to know. But on a technical basis, even if you were on that news event, you would not be in the stock. You would have sold it out because it's not moving with the averages. We also have NVIDIA, which seems to do no wrong. It had a nice upward streak, and then it had a above average volume mini gap down, but it has since traded very constructively. It's very tight in its formation, and now it looks like it's trying to go higher. So it's displaying appropriate leadership characteristics. Facebook is something that we've put on. It had a viable gap up on the 28th on strong earnings. It's since just gone sideways. It's in a way constructive, but it's supposed to be a leading stock. So I would expect that maybe it'll issue some sort of pocket pivot buy point. That's along the way here, especially should the markets be able to break into new high ground. That's the big if, though. Obviously, we've seen, with the S&P and the NASDAQ, S&P is a breath away from new highs, and it tends to get knocked down shortly after. So if that happens, and the knockdown can be pretty short and sharp over a period of, say, 3 or 4 days, then obviously that would be a point at which you would take your profits or keep your stocks very tight.
Hey, Dr. K, one of the things about Facebook that I don't like is the fact that the market's been moving higher, but it hasn't moved, it hasn't broken out or moved higher with the market. And it's just trapped in this base formation. You could get a pullback down in the 50-day moving average, but I'm wondering if this one isn't just saturated in terms of ownership. Everybody's into the stock. Every institution owns pretty large positions in it, and so there's no real nobody left to buy it, and it's been lagging quite a bit. So I'm actually open to this as a short if it busts the 20-day. It's tried to hold, but this is one to keep an eye on because I think it can be played either way depending on how it reconciles itself. And I basically, I short it up here, I buy it on the pullbacks and short it at the highs back and forth, and it moves back and forth almost religiously, about 1%. So it can be played on that basis if you like to day trade a stock. I mean, I've joked that I can make a career out of day trading Facebook the way it seems to move back and forth. But it's a little bit puzzling, like you pointed out, why this thing is just sitting here and not going anywhere, and the market's been moving higher and looking pretty good, and it's just sitting there. So that's my 2 cents.
Yeah, I mean, it's been dragging. It was dragging before, and it is an institutional quality stock. It's a leading stock. It displays just enough leading characteristics. In other words, if markets go higher, I think the institutions will probably have to push it higher as well, so we could get that pocket pivot. But on the other hand, this is a stock that has lagged, and there's defects in the chart, and you can see that when it pulls down, it can pull down pretty fast. But yeah, we've been pointing out from this entire rally, there's still been a real lack of true leadership quality names. Google obviously is not going anywhere, and Priceline is just that still seems to be having its issues. Amazon looks okay. I mean, that's hitting new highs. That was probably one of the healthiest leading stocks. But again, the number of Amazons out there, you can count on one hand or less. Netflix, forget about Netflix. So it's a very tough time for spotting good leaders. And I want to mention one other stock that's EDU, and here is a name that we've put on the list a couple times. Let's see, the most recent was on the 19th of April, and it had that viable gap up on a strong earnings report. It went sideways constructively after that point. You'll notice that even though the markets were heading lower, it was able to maintain a sideways trade, showing that it's stronger than the market. So if you had bought it, there would be no reason to sell it. And when it went to new highs, then on the the 31st of May, it has a very, very high volume reversal. I mean, the volume was 13 million shares that day, against an average volume of 1.5 million. So that's your red flag. That's your clue. I looked for the news. I didn't see any news out on it on the day. So, that's your clue that something's not right. At that point, I keep my stop super tight. In that kind of formation, I might even sell it if it breaks the low of that high volume reversal day. So I would sell the next day, maybe sell half of it. Then it has a very weak rally on the 2nd of June, very low volume rally. Then it stammers around, and then you have your big dunk on just yesterday. And again, this is the kind of market where you just can't afford to sit around and wait. You've got to be really quick on the trigger and take your profits when you have them. I mean, if you'd sold this one on the high volume reversal day, that's you get a price of about 42 and change. If you had bought this one at I don't know, in the high 30s, you're sitting in a 10 to 12% profit in the space of 6 weeks. That's great in this kind of market. But if you waited, then all your profits evaporated. Anyway, this is the market we're in. We know it. And with that, I will turn it over to Gil.
Yeah, my take here is that things have actually gotten kind of euphoric based on the individual stocks that I've been playing. I mean, NVIDIA has been a good one as a much more orthodox play, but I'll show you some other things. I find in this market that bottom fishing type plays tend to produce the biggest upside. So here's one in Amberella. You had this huge bottom fishing gap up right here, and it tests the low of that, and then boom, it's out of there. So if you bought into this one, you're making a fair amount of money pretty quick, over 10% in just a couple of days. Has great time value in terms of a short-term swing trade, and that has a nice move. Now you look at Avago, which is we just put on yesterday as a viable gap up. It tested the low of this viable gap up here, and now it's just holding tight, which is constructive, but notice that you don't get as much upside thrust following the viable gap up, and it seems like it's the bottom fishing sorts of moves that have the best upside percentage gains. So you're kind of in a market where stocks coming off the lows are really what's pushing a lot of the index action, and you have some things that are acting well. I mean, among the names we put on, Silicon Motion has continued to go higher, Max Linear has continued to go higher. What are some other ones? This BSX now is starting to launch, and you notice how it gets hit with some volume, but it holds along the 20-day line. That's my favorite spot to buy. That's the same thing with Acuity Brands. Pretty much the same story there, where you buy it on weakness, and notice how the strength gets sold into on the breakout attempt up here, and that's pretty typical too. When things start looking too good, that's when I get a little bit nervous, and I look to start taking profits. I've been playing things like the cloud names, which I guess you would say that Amazon is the, let me get this pen right here, one of these days, here we go. Amazon is perhaps the big daddy or the big stock cloud name here, but you've seen one of my favorites has been ServiceNow, which I thought was viable along the 20-day moving average, and now it's trying to break out of this cup formation, but in my view, that's a place to sell it. Workday was also a fantastic play off of the 200-day moving average. If anybody was watching that, you actually had a pocket pivot. Then you get a breakout here, but the breakout doesn't go too far, and you're pulling into the 10-day line. Another one that was very nice for those of you who follow me on Twitter, I talked about this as being viable here on the pullback after earnings. A lot of times you'll see a stock get hit on earnings, but it will reverse, and I'm always watching these. Anything I see getting hit on earnings, I'm looking for some kind of a turn off the lows on the 620 chart as a possible entry point. And it's very much a contrarian approach, but it's a swing trading approach that takes advantage of the ugly duckling theory, which drives a lot of my thinking in this market, and also the fact that the market basically likes to fake everybody out all the time. So when things start to look too good, I get a little bit nervous and I want to take profits. And when things start to look too ugly, that might be the time to step in. Here's another one. Zendesk is another cloud name, has moved higher. I think we looked at this last week, but you had a little pocket pivot right here, very subtle, and it took off, and it's had a big move from there. You look at these other names, NetSuite. This one also broke out, pulling into the 10-day line. Manhattan Associates. I think this is one we've talked about before, but on a viable gap up here, but it broke down and failed rather quickly. And then you have the move off the lows when it's starting to look pretty ugly, but you start getting some pocket pivot type action in here along the 10-day line. And that's really what I look for in this market, is things that are breaking down and then they start to turn on, here's a pocket pivot here, and they'll start to turn, and you saw that in, Now was one of them, almost at the same time that this stock was doing this action here, where it's showing pocket pivots along the 20-day line. You can see what I'm talking about here. If you look at this, see how this had a gap up, it failed and pulls in. Now it's holding along the 20-day line, and you're starting to get pocket pivots in the pattern along the 20-day line. So I think you got one here, that occurs there. You got one here, that occurs here. You got one here, that occurs here, right there. And then more recently, it's had these pocket pivot signatures as it broke out, like it did yesterday. And so this has been a decent trade, but it's up, 10, 12, 13, 14, 15%. And if I bought it off the 20-day line, guess what? I'm selling into the breakout and letting it pull in and seeing where it goes from there. So I'm not trying to buy the breakouts and think I'm going to make this huge return. It's going to double or triple for me from there. That stuff just doesn't really work. But it is a bottom fishing type of pattern, and We've talked about this before because look how ugly this thing looks on the weekly chart. You know, normally I'm not going to touch something like that. On the other hand, it might be in a shortable position. So I think if the market starts to reverse here, I think you should be, you know, watching all of these, because we know that these ugly duckling setups, they'll have their moves and then they'll fail. We saw that in the airlines, and we've seen that in other names more recently as the market rolled over. I believe it was last month. When was that? When we had this pullback. You know, you saw the airlines fail, and you'll see other stocks that have come way up off their lows start to fail. And so it's just that sort of market, and it's rotational. A lot of these names don't have earnings. You know, one of the nicer oil plays that I've been trafficking in has been Silica Holdings, all the way up from the 20-day line back in April when the oil started to turn, back in March, I guess, when oil started to turn. When did that happen? Take a quick look here. Yeah, back in February, March, when it started to turn, and you're starting to see pocket pivots in names like this. You see FANG moving higher. You see EOG Resources trying to break out here on a little pullback. And so, you know, what's puzzling with a lot of these names is they're not showing any earnings. You look at the steels. The steels were leading coming off the lows of February. And look at this move in U.S. steel. And it's still leading. But what are the earnings on that one, Dr. K? What do those look like?
Earnings on steel, we've got, you know, it's very in red across the board.
Yeah, losing money. So there's no earnings here. So what you have is a market that isn't being driven by fundamentals or earnings growth or the so-called tan slim characteristics. It's just being driven by money flows back and forth because central banks around the world are just printing money like fiends, and all of it's just sloshing back and forth. Meanwhile, interest rates remain low. Savers are getting hosed because they can't get any interest. My mother-in-law, who lives off of her CD interest along with a small pension, she's panicked. You know, she's like, how do I get more interest? Well, you don't. You're screwed. Here, I'll write you a check to cover your expenses this month. You know, it kind of gets down to that. And so savers are getting hosed. Interest rates are staying low. The Fed probably is on hold based on the jobs number this past Friday. So it's just a big sloshy rotational market. There's very little going on, in my view, in terms of fundamental drivers and money flows into the market that are consistent and what you would call secular, based on some, you know, demographic of money either being spit off by the economy or baby boomers having to save. They're all out. I think the funniest commercial I've seen recently, or not commercial, but rather a guy on TV, I mean, I guess CNBC could be called one big commercial, but he's making the most ridiculous argument I've heard for a continued bull market or throughout you know, the rest of 2016, which I guess is a possibility, and I'll let the stock's price volume action tell me what to do. But the argument was that, you know, guys are going to retire soon, and they're looking at how I need to make some money. So what are they going to do? They're going to buy stocks. Okay, so that's a way to make money. You can lose a lot of money getting involved in stocks at the wrong time, and a lot of baby boomers retiring around year 2000 and around year 2008 got hosed pretty well. So I think when you're starting to hear specious arguments for a continued bull market based on the desperation of people to make money in investments, you might be getting a little bit long in the tooth on the rally. And of course, we are back up near the highs. S&P is actually above the November high. If you look at this, here's a November high, just clearing the November peak on this side, but it's still below the summer peak. But you know, it's up at the top of the range. So are we going to break out in a glorious new bull market, or are we going to roll over? I'm leaning towards, at least short-term, some sort of rollover that maybe takes the S&P down to the 50-day line, and same thing with the NASDAQ composite, given the extension in a lot of stocks. And I let the stocks guide me on, you know, both ways. When they get extended on the upside, I'm looking at backing away and taking profits, and that's in an active swing trading approach. It's pretty concrete. And then looking at weakness, you know, when I'm selling out of stocks, I might go short some things. And look to play the downtrend on a short-term basis. Somebody points out EDU et al. Volume impacted by Russell rebalancing. Yeah, but you know, why is the stock breaking down like that? That doesn't strike me as Russell rebalancing. Usually, things will hold tight and sit there. I know the other this one's reversing. This is another one of these education for profit type names. I know there was some news a while ago, but they're talking about helping students out with their loans. I'm not sure if that's a negative for these guys, but they all seemed, there were a few of them. What are some other names in the group? Is Apollo still around, or did that one? Yeah, it's still around. Yeah, it's a dog. But I don't know. I guess I'm not sure what hit it. I'm not sure if the rebalancing alone would be responsible for that. That seems a little bit odd, but I guess in this market you never know for sure. So in any case, what would I be shorting? I think if you're alert, you can actually be trying to short some names that have been on our short sale watch list. When we came out with some short sale names a while ago, but you had to back away from the short side when the market turned and the indexes all cruised up through their 50-day moving averages, which happened 3 weeks ago. Now you can see Netflix could have been shorted on this rally into the 200-day line, and if you look at the pattern, it's really just a big head and shoulders. So you're getting another right shoulder, and it could eventually be breaking for lows. I know the rally recently was caused by talk of Apple perhaps looking to buy a media company, but that seems like a bunch of baloney to me, and probably just set up the short play in this thing, and in fact that's exactly what happened. So somebody pointing out XRS, is that another one in the group? Yeah, that got hit yesterday too. That's a little weaker. So anyways, looking at Apple, for example, this one looks sort of constructive in this flag pattern, but it hasn't been able to get past the 10-week line on the weekly chart. So this one might be coming into a position where it might be shortable if the market rolls over, and you might be able to come after that. It's up 77 cents. It looks like money's hiding in here, and I think partially because that's a dividend-paying stock, and they will come after this turkey just for the dividend. But my thinking is they might just push into this and it will roll over, so I definitely keep an eye on it. Now, I think a couple weeks ago I said that as shorts I like these consumer names that we put reports out on, short sale setup reports on. And you can see Home Depot has continued lower, so it's pretty weak. Disney is another one. Come on, Disney. It's holding along the lows here, so I'm not sure. I'd like to short it on a rally up to the 20-day, but it's only a couple of percent below that. But it's below all the moving average, so it looks a little suspicious here, and maybe it will break down. But these actually have remained weak, so from a relative strength standpoint, these have been weaker names. Whether they're in fact shortable here is, to me, it's a higher risk position because you're undercutting this low here. You can see this. You're undercutting a low here. I think you're just below it. So that could set up a rally into the 20-day. You might want to watch for that. So I'd also keep an eye on Apple today in case it rolls over as it approaches the 50-day line here. But it's cruising higher, and it looks like money's just piling into it. I don't think you can get in trouble or lose your job if you're an institutional money manager buying Apple at 9 times estimates or something like that, whatever it's at now, for the dividend. So that's probably what's going on there. But I'd be keeping an eye on that. Let's take a look at this on a 620 as a possible got to get these charts out of the way here, clear off some room. There we go. Yeah, it just keeps cruising higher. Notice though that you're starting to see the MACD, it's just going higher. Money's coming in, it's starting to diminish, and you're starting to get crosses in the MACD. So it may be starting to run out of gas, so you'd want to watch this one on a possible MACD sort of stretch thing as it's rolling over. That's been one that we've looked at. What are some other ones we've looked at? Oh, Google. Now Google's kind of hanging in there. It looks like it wants to try and go higher, but if you look at the weekly chart, and you got to reference these against the weekly chart, that's not a very strong pattern. So I think if the market did roll over, you would definitely see Google probably come down And right now you're right at the 50-day moving average. So I'm not sure if that brings in the short sale range or not. You know, I guess on a risk basis you could short it here if the market starts to roll over, and then use the high of, say, yesterday at 743.81 maybe as a stop. Right now we're trading at, what are we trading at? 741.95. So you're pretty close there. So that's one to keep an eye on. We talked about Netflix. What else? Actually, what other ones have we put on there? Oh, Microsoft. Microsoft runs into the 50-day line, and that's what it looks like. Late stage failed base, rolling over at the 10-week line here, rolling at the 50-day, and moving lower. So that's a little bit slower stock, so you may not get a lot of downside juice. Let's see. Any others that, Dr. K, can you recall any of these other ones? Maybe I need to look at my...
let's see. Tesla.
I think I actually have it. Let me check something in here. Yeah, here they are. Tesla's one. Yeah, there you go. Tesla's, though, been trying to hang in there, and you actually had a pocket pivot 3 days ago, and now it's pulled back into the 50-day line. Volume seems to be drying up here. Let's take a look at this. We're running, let me get my chart view up there, 9.4% below average, so that's kind of interesting. But so it almost, to me, that looks more like a long than a short, definitely. Mobilize, another one to be looking at, but that's been acting more like a long than a short. Amazon, I think we had put on when it looked like it might break the 700 level, but of course that's looking more like a long. McDonald's has been weak, and here you're looking at a rally up to the 20-day as a possible short sale opportunity. Right now you're trading at what? What's Mickey D's trading at right now? 122.77. So it's the 20-day line is at 123.77. So it's heading that way. Notice Facebook coming in. So I actually shorted it a little while ago around 118.55, I think it was. And like I said, I'll short it at the highs of the range, cover and go long at the lows of the range. I think eventually it's going to bust out one way or another, but I would not be surprised to see it bust to the downside. Everybody seems to think that you have to own Facebook just like you had to own Apple when it was up at around 120, 130. So I think the potential for trouble in paradise is definitely there. So anyways, most of these short sale reports that we put out a couple of months ago, when the market turned off the lows in April, I believe it was, that pretty much ends the short side, and then you got to watch and see how things rally. So if you keep track of these, you can see that Netflix rallied into resistance and has been weak since then. Walt Disney did, McDonald's did, Home Depot, Microsoft. Google's sort of on the fence. So that's where we are with these. I would be looking perhaps, look at, say, Las Vegas Sands might be, it's coming up to the top of this shortable gap down, so that might be in a position to short. Caterpillar is kind of interesting. I shorted this one yesterday, and you notice how it's gone past the 50-day. Well, the one thing we know about short sale targets is that they can cruise past the moving average by 3 to 5%. So if it gets up to 78, and the moving average is 74, you're a little over 5%, but at that point it's starting to show a bit of extension on the upside, and so on that basis you can come after it on the short side. So I'm still watching Apple. We've got a little bit out here now on the MACD cross, but it's just edging up, edging up. Facebook is coming in, we're 118.16 bid. So, and I would, if the market were to roll over, I would say Facebook probably, you can see this was shortable this morning before the opening, broke the, you had a 620 sell pretty soon, but let's take a look at Facebook here on real time. See, now it's come off hard off the peak, and it looks like people were loading into it, and then suddenly the buyers have disappeared, so now it's just kind of drifting lower. But I think when you're seeing the market weaken and you see some of these big stocks rallying, I think it's money managers trying to stash cash somewhere, and for the most part, they can't get fired for buying Facebook here. They probably can't get fired for buying Apple here. If they bought it at 130, they might get fired, but if they bought it at down here, at least they can come up with excuses for that. So here's a question here. TXT, yeah, the defense stocks have been looking pretty strong. Textron, you know, that's a breakout and it's pulling in if you like it. But if they start hitting the market, everything's coming in. But at least if you can keep risk relatively tight on this, then I think you're okay. What are your thoughts on using Bollinger Bands? I don't use them. I don't need them. Bollinger Bands are for losers. If you can't read the price volume action, you know, that's really all I need to do is look at a chart. You know, I don't need Bollinger Bands and I don't need other stuff. I use, on this chart view, I do use, you know, force index, which helps me a little bit, but it's basically like an accumulation distribution indicator in drag. So, but yeah, I know a lot of people like Bollinger Bands, and if you like them and they work for you, use them, but I don't use them. So you ask my opinion on what I think of them, I think they're for wimps. So anyways, SKX. Yeah, here's another example of something starting to roll over, but it's basically in this big bear flag. You know, if you look at this on a weekly chart, big old bear flag, and just trucking sideways, and maybe it's ready to break out. Notice how it runs into resistance along what is now the declining 40-week line. So, and then you could probably throw in. Let's go through a few more of these. Let me go through some of the names. I'm just going to cycle through them. The airlines are all rallying today, and they've been rallying for the last couple of days. I'd watch these on, like this one I'd watch up at the 50-day line, 4404. Delta rallying to the 20-day, and that might bring it into shortable range. And just because these things are rallying a couple of bucks doesn't mean there's some newfound strength in these names. I know some people want to get excited over them, but in fact the rallies could just be shortable. What are some of those? ALK. This one is rallying through the 20-day, probably the 50-day, given how extended it is on the downside. The 50-day at 72.11 would be your best shot. Let's see. Some other airlines. Help me out here. Love. Okay. That's pushing up to the 59. Maybe that's where you short it. This one's been a little stronger. One that's been breaking out, I think, not this one. SkyWest. SkyWest is broken out and trying to turn there, so looks interesting, but not like I'm going to jump all over it in this market. The group is weak, and that's one of the few that's been acting well. So, you know, is it going to drag the group up, or is the group going to drag it down? So, how are we looking at volume this morning right now? We're down 64 on the Dow, you know, 0.36%. Nasdaq's down just under 20. Oh, let's see. Volume is lower, so yeah, so you're running a pullback on lighter volume. So, you know, I guess if you want to look at that as constructive, you can. I think it's more a matter of what's going on with the stocks. So I'll tell you some names that I look at. The solars are all deep down and dirty. I mean, that's so ugly, you know, even its mother doesn't love it. But you can see that it might be trying to turn. I'm watching this for some kind of pocket pivot, perhaps, on the turn. Let's see what the volume looks like. Whoops, security not found. Lie. Let's go here. Bingo. Minus 7% below average, holding tight. You know, maybe this is one that's going to have a move off the lows. I notice a lot of these stocks like this have some of the sharpest moves. With the price of oil up, maybe solar starts to come back. I know somebody upgraded Solar City, and that started up, and it was a good trade, and now it's reversing back to the downside. But if you look at SunPower, is another one. This is just look at the weekly. I mean, that's ugly. Okay, but it could be an ugly duckling. You never know. So you sort of want to watch these. I think they create good trades. You know, the oils have done that. The steels have done that. There's been a lot of other weird stuff like Umbrella. That's a great trade. Maybe it's back up. Wow, that thing doesn't want to go down. That's because everybody's shorted, and they keep hoping it's coming in. It doesn't. It just chops them up. Let's see. Apple's still going up, so no luck there. Even though I got a little position out on it right now, nothing rolling in for me. Facebook, on the other hand, is coming in. Let's see. Look at a name like CyberArk. Okay, look at that move. That's a nice tradable move, but now it looks like it might be over. So the other cybersecurity names have been holding tight, like Fortinet and FireEye. And I'm keeping an eye on these. Notice how these look like they might be trying to form bottoms. If the market's able to find its feet again, maybe some of these go. So I'm watching, you know, things like Fortinet, FireEye, First Solar, Solar Edge among the solars also is pushing off. There's no pocket pivot in here to speak of, but notice how you kind of had an exhaustion gap here. You undercut the low of that exhaustion gap, and then boom, you head back to the upside. So you could have bought it at 17, and you got a pretty nice profit there if you're buying that type of setup. But in this market, that's the kind of setup that will have success. And you know, that's just the way the market is. I can't make it turn into a classic canceling market where you can go, you know, use all the mindless rules that they tell you make investing as easy as 1, 2, 3, because it's not really like that. It's more like investing is as hard as 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 these days. So VEEV, somebody's asking about. Let's take a look. VEEV's system chart looked good. Good earnings and momentum, maybe too. That's too negative. What negatives? Well, the negative would be that it's too extended, rather, not too negative. It's just too far up there, so I'm not going to buy it up here. I think you'd be an idiot to buy it up here in this market. Let's see if it comes in. Maybe it tests the 10-day or the 20-day. But that's kind of what it looks like. It's coming out of this big, ugly base, and so it's way up here. So you're not going to buy that there. You could have tried to bought it, you know, down in here when it was tight, and maybe some voodoo action down in here. So, yeah, let's see.
When it's behaving this well, then you know, and this is the market where you keep your profits.
Yeah.
You keep your real tight on this one.
But you definitely, yeah. And if you bought it down here, you know, and you say you bought the gap up move, then you're making money. But you definitely don't want to buy it here. So, anyways, look at the, you know, there's news that George Soros has taken out a big bet on a negative bet on the market. And he's gone long gold stocks this year, but you know, they've had a big move this year, and he owns a big position in this one. He owns a big position in gold itself, and you'll notice that it's gapped. Gold, the GLD is gapped back above the 50-day line. So I would call this yesterday a pocket pivot above the 50-day line. Notice silver, and the thing with the metals is you kind of have to buy them when they look their ugliest. You know. When they look strong and they're going up, you know, everybody wants to jump all over them because it looks exciting. But the reality is you have to be very opportunistic. And if you look at the SLV, for example, it basically came all the way back to the top of this space here. So it comes in here and actually comes right into this level here and undercuts just a little bit. And then it gaps up on, this is not a pocket pivot, almost, sort of, but it's a pocket pivot coming up the 10-day, a 9-day pocket pivot. Is there such a thing? And then it holds just under the 20-day line, and then you gap up again yesterday. And I'm not sure if this means that they're going to break out again, but if you had opportunistically bought these on the pullbacks, and I think that's where you have to buy them. I think you cannot rely, and you can see it on the weekly chart, how it pulls right into the top of this little structure down here. You cannot rely on buying into strength. If you do, you're basically playing Russian roulette and risking that the stock will roll over and come in. And because you're in a rotational market, as I see it, more than a, say, trending secular money flow type market. So you have to be looking at pullbacks mostly. Let's see, any other things that I'm looking at. I've been watching these, the gamers have been doing okay, these video gamers, and they're hanging tight. But these guys, Activision, have announced a 171.9 million secondary shelf offering, which seems kind of excessive. That's a lot of stock, even though it does trade 7.2 million shares a day on average. That's a hell of a lot of stock to be unloading into the market. So it may just go sideways, but it's been acting okay. Electronic Arts hanging tight too, and that one had a Bible gap up back in early May, and it's kind of hanging sideways. So, you know, a little this, a little of that here, and not a whole lot of not much right now. Weibo has been a great play. We put that on as a pocket pivot way back here at 18, 19 bucks, and it broke out again, and it's continuing higher. I would, you could see there's a voodoo pullback in here. I think I pointed this out last week, but you can see it right here. You get this voodoo action. Lowest volume in the base as it's going sideways, and it holds tight, and then boom, it's out of there. And you get this great, about a 20% move, a little more than that, from there. And that's, you know, I think you sell it at that point. So let's see. Some other cloud names that might be worth watching. Here's Adobe pulling into the 20-day lines, pulling down. Citrix Systems was along a 10-day line a few days ago, and now it's come down. Market's starting to roll over. Now maybe Apple's going to come in. Let's watch this. Starting to come off a little bit. I think money's hiding in there. So my view is you use the rally as a possible short opportunity. Let's see. And I think just for the most part, you're looking to buy things on pullbacks, and you watch the volume. LinkedIn could have been bought yesterday right at the 10-day line. I actually bought it yesterday and sold into this move today as it comes up close to the 140 level. But again, that's a nice swing trader. Intraday, this is the one we talked about. Notice how you get a voodoo pullback. I don't know what happened to my volume here. But you get the voodoo pullback here, here at the 10-day line 3 days ago. You could have bought it, and boom, it jacks a 1.5 to the upside. So there you go. There's a nice trade, taking advantage of the voodoo pullbacks. But in this market, that seems to be what you have to try and find, are these voodoo pullbacks after strength rather than chasing strength, and using unorthodox sorts of setups, shakeout type moves. Paul Alternatives, we talked about this last week. This may be turning back into a short though, because it rallied back into the 20-day line after undercutting this low. But that's a tradable move, and then it rolls over. So let's see. I want to go through some other names here. Starbucks, I don't know if that's shortable. McDonald's, still rallying. It might be getting into short sale range. Panera is funky. This might be shortable up here at near 220. It seems to rally up to the top of the range, and then it comes back down. Looking at some of these have all broken down. Rallying back into the 20-day line after the gap down, so you want to watch that. Royal Caribbean also looks a little funky as possible short sale plays here on these rallies. Other than that, I don't really have too much more to add. Do you have anything, Dr. K? Any questions?
Not particular. I mean, there's people's views.
Yeah, so I got some ideas I'm looking at, but for the most part, I think you've had a nice move in the market. You might be looking at being more defensive in terms of taking profits and looking to buy back on pullbacks and just operate on that basis. In the meantime, I do see some things I might be interested in shorting. For example, the CCL is one of them. But other than that, that's pretty much all I've got. So hopefully that's somewhat helpful, you guys.
I was going to say that, I mean, some of the, there's some unconventional buy points in this kind of environment, and we're not particularly conventional. So, if we see something that is unconventional, we may, elect to throw it up there in terms of, pocket pivots or Bible, more like pocket pivots, especially like the bottom fishing type.
Yeah. I've given some stocks to keep an eye on here, like the Solars might be trying to come off the bottom, some of these cybersecurity names as well. So on that note, you guys, that's all we've got. I want to get back to trading, and we'll catch you next week. So have a good weekend, and good luck today.
So long.